Imagine Amsterdam 1637. Streets buzz with whispers of tulips worth as much as houses. Traders buy bulbs with borrowed money, prices soar, peer pressure, hype, madness all fueling the frenzy. Yet just beneath the giddy surface, disaster brews. Why do smart people fall for the same illusions century after century? The answer is lurking in the rise and fall of financial euphoria, this story's oldest trick. Let's start where modern speculative crazes began: tulips. What made flowers worth fortunes and then worthless overnight? Here is how this 17th century frenzy reveals timeless human quirks. In 1637, a single tulip bulb in Holland sold for the price of a grand canal house. Traders flipped tulips like stocks, sometimes with no bulbs in hand, just paper promises. Speculators from all classes got caught, betting on ever-rising prices fueled by pure excitement rather than any real value. Think of mania like a carnival funhouse mirror. Everyone sees exaggerated gains and rationalizes taking irrational risks. This illusion thrives on euphoric narratives, where debt is smart leverage and each new buyer believes they'll cash out before the fall. It's a crowd dancing on thin ice, dazzled by reflected optimism. When prices crashed, estates and fortunes evaporated overnight. But tulipmania left an important legacy, a warning etched in financial history. It showed us that investor euphoria is cyclical and always sowing the seeds of its own bust, if only we'd remember the lesson each time. Fast forward a century to London, 1720. Here's a tale of a company promising endless returns, a government desperate for cash, and a market drunk on dreams. The South Sea bubble was more than greed, it was a masterclass in self-delusion. The South Sea Company convinced Britain it would manage government debt and make investors fabulously wealthy. Shares skyrocketed, though profits were mostly smoke and mirrors. Investors from nobles to shopkeepers poured money in, driven by the dazzling rhetoric of endless growth and national glory. Imagine debt as a magician's cloak, making things look richer and safer than they are. The company's debt swaps disguised risk, giving investors a false sense of ownership in something revolutionary. This corporate smoke masked the fragile reality beneath, much like junk bonds did centuries later. When reality hit, investors lost everything. Yet the bubble's burst influenced financial regulation and skepticism about corporate promises. It taught markets that glamour can mask thin air, and red flags aren't just warnings, but survival signals if we choose to see them. Fast forward again, this time to the 1980s. Junk bonds, famously pushed by Michael Milken, unlocked mountains of debt for companies, but was it financial genius or a powder keg? The answer is blindingly clear in hindsight. Michael Milken took risky, junk bonds and turned them into gold, fueling a takeover frenzy. Suddenly, companies with shaky fundamentals borrowed billions, betting that rising asset prices would cover their debts. Greed and innovation blurred as the market believed leverage was the ultimate shortcut to wealth. Picture leverage as nitroglycerin, powerful but unstable. It magnifies gains like a telescope, but also amplifies losses with brutal speed. Junk bonds were the financial equivalent of lighting the fuse on a bomb, exciting in the short term but terrifying if mismanaged. When the junk bond bubble popped, the consequences were massive: bankruptcies, scandals, and a soured market trust. Yet this episode also shook up Wall Street regulations and humbled investors once again. It's proof euphoria's cycle is endless and why skepticism remains the best defense. Back in Amsterdam, the tulip bulb mania ends as abruptly as it began, leaving wreckage and lessons. Galbraith's book echoes this across centuries, warning that every new financial wizard is really a harbinger of disaster. Next time you hear about a can't-miss investment, pause, ask yourself, are you dancing on thin ice? Try this: challenge the hype first, then ride the wave smarter. Subscribe for more book summaries like this one.